Hello, everybody. Welcome to today's class of economics. We will be doing today chapter number 1, that is Introduction to Business Economics. Along with that, I will try to cover business cycles and give you a few tips on macroeconomic chapter that is by the name of Public Finance. So, dear students, how are you all doing? Hi, everybody. Give me a thumbs up in the chat box. तो कैसे हैं आप लोग? How are you all doing? Can I have a reply in the chat box from everybody? Welcome to the class. We had done a brief introduction of chapter number 1 in yesterday's class, but I still will be revising it from the start so that every concept that is there in this chapter is clear, crystally clear in your mind. Hi everybody, very good evening to one and all. Hello Sangeeta, how are you? Welcome to today's class. What about others? Do we have anyone else? Hello Tanuja, I hope you all have revised whatever we had done in yesterday's class and national income is no more a problem for you. Good evening, Nandini. All right. So are we all good to go for today's class then? Now, whenever we talk about economics, can I say economics is a social science? Hello, Shivani. Why economics is a social science? Because it deals with human behavior. Humans live in a society, and therefore economics is the behavior of human, and hence we call economics as a social science. Economics has been derived from a Greek word which is by the name of oikonomia, which means household management. Till the 19th century, economics was known as political economy. So another name which was given earlier than 19th century was political economy. Today the same political economy is known as economics. So now there are certain definitions to economics. The first and foremost definition is the science of material wealth. What do we mean by the word material? Material means wealth which is created from goods and services, wealth which is created from goods and not from services. So material is something which is only goods, not services. This definition was given by father of economics Adam Smith. He had written a book, An Inquiry into Nature and Causes of Wealth of Nations, in the year 1776, and he is termed as a classical economist, where he believed the most important thing to be generated in an economy is wealth. So goods should be produced. From produced goods there will be generation of wealth. He did not distinguish between what is good and what is bad. There was no concept called as merit goods or demerit goods. Adam Smith was a promoter of capitalist economy, and in a capitalist economy, merit goods, demerit goods, there is no as such distinction given. So according to Adam Smith, ना बाप बड़ा ना भैया, सबसे बड़ा रुपया, भाड़ में जाए जनता, अपना काम बनता. So over here what I meant is, at the end of the day, the only thing that mattered is creation of money. This definition was given by Adam Smith. Yes, dear students, I hope you all are clear. If you all are getting clear, just type in the chat box clear, clear, clear. Now I move on to the next part, that is science of material well-being. Now well-being also means welfare. So see beta, Adam Smith believed that wealth should be created. Alfred Marshall believed that wealth should be created, but not at the cost of society's welfare. So if somebody is producing liquor, cigarettes, wealth is definitely created, but liquor, cigarettes do not lead to well-being of the economy. So is money important? Certainly. One of the most important things is money. In fact, the most important thing is money. But how that wealth is created equally matters. So Adam Smith did not distinguish between what is good and what is bad. Alfred Marshall did. He believed that wealth should be created in a manner which leads to the welfare of the society. So he gave more importance to merit goods. He gave importance to society. According to him, economics is the study of mankind. And mankind is nothing else but welfare or well-being. So this definition was given by Alfred Marshall. He wrote a book by the name of Principles of Economics. It was in the year 1890, considered to be as a neoclassical economist. And as I told you earlier, that according to Alfred Marshall, economics is the study of mankind. Now, beta, we all know, being humans, we have unlimited wants. But the resources to satisfy these wants are relatively scarce. So the next definition is scarcity oriented. And because there is scarcity, we need to make a choice. See, dear students, if there was abundance of resources, then was there a need for us to make a choice? We could have purchased everything that we have ever desired of. But all our desires are not fulfilled because of lack of resources. So can I say scarcity is a root cause for making a choice? Why do we have to make a choice? Because there is a scarcity. So this definition of science of choice making is also called as scarcity oriented definition, given by Lionel Robbins in his book An Essay and Nature and Economics of Business Science or Economic Science. It was written in the year 1932, considered to be as a neoclassical economist. According to Lionel Robbins, can I say human wants are unlimited necessities, comforts and luxuries. That means they are gradable. Not only are they gradable, but at the same time, the resources to satisfy these wants are relatively scarce. Now, the scarce resources have an alternative uses. So, for example, if I am a resource, I could have been utilized right now for a rapid revision batch of yours, or I could have been utilized for some other batch. So, can I say every resource has an alternative use? So, according to Lionel Robbins, economics is a social science which studies human behavior as a relationship between ends. Ends means wants, and scarce means resources which have alternative uses. So what do we understand? There are 4 characteristics of this definition. The very first characteristic is human wants are unlimited. The second characteristic is human wants are gradable. The third characteristic is that resources are relatively scarce, and these scarce resources have alternative uses. Yes or no? Are we clear? Are we sure? So, Robbins believed that economics is neutral between ends. He did not distinguish between what is a good want, what is a bad want. He believed that a want is a want, whether it is a good want or a bad want, whether it is a merit good or a demerit good. So the only person who focused on the concept of merit goods, something which leads to the welfare of the society, was one and only Alfred Marshall. Now, there is a concept called as opportunity cost. Opportunity cost is the next best alternative foregone. So, if you are a Shah Rukh Khan fan by any chance, it is a famous dialogue where he says, "कुछ पाने के लिए कुछ खोना पड़ता है सेनोरिटा." So, whatever तुमने खोया, वो तुम्हारा opportunity cost. So, I'll explain it in English. To gain something, you need to lose something. Whatever you lose is your opportunity cost. And in the words of Shah Rukh Khan, कुछ पाने के लिए कुछ खोना पड़ता है, जो खोया वो opportunity cost. Opportunity cost is the opportunity lost. It is the next best alternative which is foregone. And why are there opportunity costs? Because of scarcity of resources. Hey, yes, dear students, I am not getting any reply in the chat box. How would I know that you are understanding or not? Kindly reply in the chat box. Yes, sir. Clear, sir. Understood, sir. Yes, everybody. Then comes the fourth definition, which is science of dynamic growth and development. This definition was given by Paul Samuelson. Thank you, Nandini. It was in the year 1948 in his book, An Introductory Analysis. Hello, Kamal. I hope you are clear with all your previous doubts. Thank you, Sangeeta. Thank you, Deepika. He is considered as a modern economist. And we all know that growth is a quantitative concept, whereas development is qualitative. Growth is the rise in output, whereas development is economic growth plus economic welfare. So, according to Paul Samuelson, economics is considered as queen of social sciences. One of the most powerful social sciences is economics, and therefore he termed economics as a queen of social science. So in growth, we only consider the rise in output, whereas in development, we consider not only the output, but also the welfare of the economy. Yes, dear students. So totally, there are four concepts: science of material wealth, science of material well-being, science of choice making, science of dynamic growth and development. Now, the subject that we are studying is by the name of business economics. And dear students, when we talk about business economics, can I say business is an activity where there is buying and selling of goods and services in exchange of money, where there is a possible bargain. So economics that is used for the purpose of business is termed as business economics. Now beta, in business we need management. So business economics is also called as managerial economics. In business we need to do decision making. So a very important and an integral part of business economics is decision making. Now do you think that decision making is easy? Decision making is very different. Decision making is complex. And whenever you talk about business economics, do you think that business economics is theoretical or it is application based? So definitely the answer has to be that business economics is application based. Therefore, it is called as applied economics. Now, economics has two branches. One is by the name of microeconomics, other is by the name of macroeconomics. Micro means koncham koncham. Macro means, I don't know what to say, large. Periya periya. Am I right with that? Can I get an answer in the chat box? Can I say koncham koncham means small and periya periya means large? Am I correct? I don't know whether I am right or wrong. In simple language in English, microeconomics means small, individual, whereas macroeconomics means large or aggregate. Hey, yes, dear students. Whenever we talk about microeconomics, it is individual or particular behavior. Right? Thank you, Sangeeta. Thank you, general contents. I don't know who are you. Then macro means aggregate, total, national, whole, or sum of all. Microeconomics is called as price theory. It focuses on price of a commodity and price of factors of production, whereas macroeconomics deals with income and employment. So can I say macroeconomics is called as income theory. In microeconomics we study partial equilibrium, whereas in macroeconomics we study general equilibrium. Microeconomics, we say that other factors remaining constant. There is a concept called as ceteris paribus. So when we study ceteris paribus, it is a part of partial equilibrium. Whereas when we study macroeconomics, it is a part of general equilibrium. We study interdependence of variable and not independent variables. In microeconomics, there is a relative price. In macroeconomics, there is an aggregate or a absolute price. Now, if you observe, there are three types of demand. One is called as individual demand, another is called as market demand, and there is called as aggregate demand. Now in individual and market demand, we study particular commodity. Therefore, they are microeconomic concepts. Whereas in aggregate demand, we study all commodities and therefore we call it as macroeconomic concept. So remember that individual demand and market demand are considered as a part of micro, whereas aggregate is considered as a part of macro. Similarly, there is individual supply, market supply, which are considered as a part of micro, whereas aggregate supply is considered as a part of macro. So if I ask you a certain question, tell me the answer about that. Yes, ready? So, can you tell me that study of a particular firm, say high Q, study of IQ Professional Academy is a part of microeconomics or macroeconomics? Everybody in the chat box, I'll be waiting for your answers. What do you think? A study of IQ is a part of which economics? Micro or macro? Microeconomics, Nandini says, and you're absolutely correct. Lovely. Romba nalla irukku. Because you are studying particular concept. So Deepika, if I ask you, my income is a part of microeconomics, but national income is a part of macroeconomics. Absolutely correct. Sangeeta, Nandini, general contents. Now, further, can I say, whenever you talk about business economics is a science, it is an art. Science means a study, whereas art means application based. Business economics is dependent on micro as well as macro. Business economics is application based, so it is pragmatic, practical solutions are given. Whenever we talk about business economics, we study markets. Monopoly, duopoly, oligopoly, monopolistic competition, perfect competition. We study capitalist economy. So all these are a part of business economics. Art is application, whereas study is a science. So business economics is a science as well as an art. Business economics studies the cause and effect relationship and gives a solution as well. Do you agree? Also, we say that business economics has a wide business, which means business economics can be used in mathematics, statistics, accountancy. Business economics concepts are used in multiple subjects, and hence we say that business economics is interdisciplinary. Then comes a very important concept by the name of positive science and normative science. So dear students, positive science was given by Robbins, whereas normative science was advocated by Marshall. Positive science talks about what is, whereas the normative science talks about what should be or what ought to be. Positive science, absolutely correct general content, that business economics is normative in nature. But what is normative, we need to understand. And opposite of normative is positive. So there are two sciences, one is positive and normative. Positive science talks about facts, study or analysis. So if you come across a word which is fact, study, analysis, it is positive science. But if you come across the words like should be, ought to be, or welfare and ethics, then it is a part of normative science. Now, in normative science, value judgments are not passed. Now, value judgments are not passed means there are no solutions. Only problem, no solution. It discusses that this is a problem in an economy. So India is an overpopulated country. It's a problem. India is a poor country. It's a problem. In India, unemployment is rising. It's a problem. When such statements are passed, it is a part of positive science because it is a fact. This fact has been arrived upon by doing a study or a analysis. So a study, analysis or a fact is a part of positive science. Does not give you any solution, only discusses a problem is positive. But business economics does not only talk about a problem, it also talks about a solution to a problem. So value judgments are passed, solutions are given to a problem. Therefore we say that business economics is solution oriented. Value judgments are passed. Yes, Deepika, Sangeeta, Nandini, Kamal, general contents. Now business economics only describes. What do we describe? We describe a problem, whereas normative science prescribes. Prescription means a solution. So business economics is dash in nature. It is normative in nature. So you will be asked a certain amount of questions. Which of the following statement is a positive science? Which of the following statement is a normative science? You should be able to identify what is positive and what is normative. I think we have discussed all of these. Economics is a science, social science. It is based on micro as well as macro. It is an art, which means application based. We study the theory of market, that is forms of market, and private enterprise, that is capitalist economy. Economics is pragmatic in nature, which means practical. Economics is interdisciplinary in nature, means economics is used in multiple subjects and concepts of multiple other subjects are used in economics. And business economics is normative in nature. Are we clear with that? Are we sure? Give me a reply in the chat box. Have we understood everything till here? That's wonderful. So dear students, there is one concept which is by the name of central economic problem. Now, central economic problem means a problem which all the countries of the world are collectively facing. And all the countries of the world collectively face a problem called as scarcity. Scarcity gives birth to four problems. The very first problem that we face is what to produce. If we had abundant of resources, we would have produced each and every commodity. But because of scarcity, we have to make a choice. Either we can produce consumer goods or we can produce capital goods. Then another problem is how to produce. If resources were abundant, we would have used any technique. But resources are scarce. So a country should utilize those resources which are available in plenty. So a country like India, which is abundant in population, should use labor intensive technique. Whereas a country like US, who is abundant in capital, should use capital intensive technique. Absolutely correct. Very good general contents. What to produce, how to produce. You have given me the answer to the third question, that is for whom to produce. So the question is, for whom do we produce? If we had enough resources, we would have produced for the rich as well as the poor. But unfortunately, the resources are scarce. So a country like India focuses more on the poor, whereas the country like USA focuses more on rich. And finally, the fourth question, what a beautiful answer, already given. What provisions are to be made for economic growth? What provisions are to be made for economic growth? See, basically growth means rise in output. Now, if I want to increase the level of output, then I need to practically have more investment. And if I need more investment, then there has to be more savings. So a decision has to be made on the amount of savings and investment. So if government policies are favorable, there will be more savings, more investment, which will lead to rise in output and we will achieve economic growth. Yes, dear students. So this is a central economic problem. Central economic problem in one word is called as scarcity. Because of scarcity, four questions are arised. What to produce, how to produce, for whom to produce, and what provisions are to be made for economic growth. Now, does every economy need to answer these questions? Is there a need for every economy to solve these economic problems? The answer is yes. How do economies solve these problems? So they choose a economic system. Now there are three types of economic system. One is by the name of capitalist, another is by the name of socialist, and the third one is by the name of mixed. Now I believe everybody should be very clear with the types of economies because this is something that you have studied ever since your childhood. Capitalist economy, the main motive is profit. Socialist, the main motive is welfare. Mixed economy, the main motive is both capital, the best of both the worlds, that is of profit as well as welfare. In a capitalist economy, can I say resources are allocated by market forces, that is the demand and supply forces. Yes, absolutely correct. General contents. A general content, what is your name? Give me your name at least. How would I tell you general content? Don't you think that is very weird? I would love to know your name. Very good. Socialist was given by Karl Marx. Capitalist was advocated by Adam Smith. And mixed economy was chosen by India. So all the resources in a capitalist economy are allocated via market forces. In a socialist economy, we have administered prices. That means prices are determined by external authority, generally the government. And then we have mixed economy, best of both the worlds. Can I say inequalities of income are generated in capitalist? Under socialist, there are lesser inequalities of income since the main motive of the government is welfare. In a capitalist economy, we can achieve faster economic growth, whereas in a socialist economy, the rate of economic growth can be slower. In a capitalist economy, labor and consumer both are exploited. Yes or no, Surya? Whereas in a socialist economy, the exploitation of labor as well as consumer is at a much lower level. Whenever we talk about capitalist economy is also called as market economy, free market economy, price mechanism, market mechanism. These are the other names which we give to capitalist. Whereas socialist is termed as a command economy or a centrally planned economy. Corruption is much lesser in a capitalist economy as compared to a socialist economy. Absolutely correct, General Surya. It is also called as free market economy, price mechanism, market mechanism. In a capitalist economy, there is a freedom of choice. A consumer can consume whatever he wants, a producer can produce whatever he wants, a person can choose whether he wants to do a job or wants to have a business. So there is consumer sovereignty, there is freedom of choice. Whereas in a socialist economy, there is no freedom of choice, there is no consumer sovereignty. You have to consume the goods which are produced by the government. So in the present world, in the modern world, there is no economy which is a purely capitalist economy. There is no economy which is a purely socialist economy. All the economies of the world today are considered as mixed economies. But with a certain pattern. So can I say that USA is also a mixed economy, but with a capitalist pattern? China is also a mixed economy, but with a socialist pattern. India was a mixed economy with socialist pattern, but today we are also going towards capitalism. So can I say India is also mixed economy shifting towards capitalism? Chalo, are we all clear? Are we sure with this chapter? I am giving you 5 minutes of time. If you have any questions in chapter number 1, you need to let me know. 5 minutes. Revise chapter 1. If there are any doubts, please ask. Absolutely correct, Surya. So I have revised the entire chapter number 1 from my end. If you have any questions, you can let me know. I will wait for 5 minutes, and after that I will go to the next chapter. If there is anything, please post it in the chat box. We start a new chapter at 8:10. If there are any doubts, even in MCQs part, you can feel free to ask. I'll just display a few MCQs in case you wish to solve. These are a few MCQs if somebody wishes to solve. Obviously, in ICI material, we have many more MCQs. I think the solving part should be done by you, so that if there are any questions, you can let me know. Yes, dear students, I hope you all are revising. Give me a reply in the chat box. Yes. Can I have a reply? Yes. In the chat box so that I know that you all are revising. Deepika, Nandini, Surya, Kamal. Okay, Nandini. Thank you, Sindhu. Thank you, Surya. Once you all are done revising, please post in the chat box next chapter. Once you all are done, I'll be waiting patiently for your reply. If you are done revising this chapter, you can go on to the next chapter. You just need to let me know next chapter. I have displayed a few other MCQs in case you wish to solve. Okay, Deepika. I wish to get a reply from everybody in the YouTube, in the chat box, saying next chapter. Only once you are done revising this one. So we are done with chapter number 1. We are done with chapter number 6. We will be discussing chapter number 5 and I'll be giving you few important concepts from chapter number 7, that is public finance. So Deepika, you have no more doubts. Everything in this chapter is clear with you, right? Feel free to ask any questions that you have. Do not fear. We are here to help you and guide you so that you score well in your exams. Once you all are done revising, kindly post in the chat box next chapter. Okay, Deepika. Thank you. Surya, Nandini, Sindhu. Kamal. Kamal, have you brought any specific doubts with respect to national income? Is there anything with which I can help you? Welcome, Deepika. Okay, Kamal. Thank you so much. If ever you want in any of the lectures, any of the sums to be solved, I will. So you revise it from your end, share that sum with me. We will solve it in the class. So, in that way, we will be able to achieve the target of revising all chapters in the next 4 to 5 days. Chalo, everybody, can I start with the next chapter? Give me a reply in the chat box. Can we go ahead to the next chapter, please? Yes, yes, yes. Done. All questions are 1 mark only. Kamal. All the MCQs are for 1 mark each. So you will be asked very simple sums which you can easily get an answer of. You just need to substitute the values in the formula and you will get the answer. Alright. So I think everyone by now should be done with chapter number 1. I am moving to the next chapter, that is by the name of business cycle. So beta, business cycle, as you see in this diagram, business cycle refers to the alternate expansion and contraction of overall business activity or economic activity. It is reflected by the changes in aggregate economic activity like gross national product, employment and income. So basically, whenever we talk about a business cycle, it is the alternate expansion and contraction in an economic activity. It is a macroeconomic concept, therefore aggregate economic activity which affects the gross national product, national income or the employment of the economy. There are 4 stages. I am not able to understand, Kamal, what you are asking for. So today you showed 1 mark of chapter 1. Like that in national income I asked for. I am not able to understand what you are trying to communicate. Anyway, so I'm moving ahead. You can type it in the chat box. Please frame your question properly so that I can answer it. Sir, today you showed 1 mark of chapter 1 like that in national income. I have not understood anything, Kamal. So, absolutely correct, Surya. There are 4 stages. First one is expansion, second one is peak, third one is contraction, and fourth one is trough. In an economy, there is good trade when there is rising prices and low level of unemployment. There is a bad trade when there are falling prices and high level of unemployment. These features of business economics are very important. Many questions are asked over here. Business cycles occur periodically. There are different phases in a business cycle, therefore they do not exhibit the same regularity. The duration of these cycles will vary. We cannot say that expansion will be there for 6 months, peak will be there for a year, contraction will be there for 5 years, and there will be depression throughout. There is no duration of this cycle. The intensity will also fluctuate. At times, business cycles are more severe, more intense. At times, they are less severe, they are less intense. The length of each phase is also not definite. Now, very important point is business cycle generally originate in free market economy, which means they originate in a capitalist economy. They are pervasive. Pervasive means they are widespread. Disturbance in one or more sectors are easily transmitted to other sectors. So if one sector is affected, other sectors are also affected by it. H point is very important. Although all sectors are affected by business cycle, but some sectors like capital goods industries and durable consumer goods industries are affected in a much more or a much higher proportion. Now, capital goods, can I say example of capital goods will be plant and machinery, tools and equipments. Durable consumer goods. Durable consumer good will be a car, a fridge, a mobile phone, a washing machine. Now, these goods, which two goods? Capital goods and durable consumer goods are the goods in which there will be more impact of a business cycle. When there is expansion, the demand for all these goods will rise. When there is contraction, the demand for all goods, all these goods will fall. So very important, all sectors will be affected, but there will be a larger impact on goods like capital goods and durable consumer goods. Though agricultural sector, industrial sector, both will be affected, but the impact on agricultural sector will be less as compared to industrial sector. So all sectors are affected, but can I say that agricultural sector, the impact will be much lesser, and industrial sector, the impact will be much higher. Can I say industrial sector produces capital goods, industrial sector produces consumer durable goods, whereas agricultural produces consumer perishable goods. So impact on perishable goods will be much lesser than the durable goods. Business cycles are exceedingly complex phenomena. We don't know exactly what is going to happen. It is difficult to make an accurate prediction about a trade cycle. Repercussions means after effects, or it can mean impact. So impact of business cycle are felt on all economic variables like output, employment, national income, prices, etc. So if there is expansion, output will rise, employment will rise, national income will rise, prices will rise. If there is contraction, output, employment, national income, prices will fall. Business cycles are contagious and are international in nature. But a contagious means that they spread easily. So it may have started in one economy, but their impact is felt in all other economies. Generally, business cycle originate in a capitalist economy, but they spread very easily to all the other economies. Now, can I say in a private sector or in a capitalist economy, their main motive is profit. They do not consider about the welfare of the people. So if something goes wrong in the economy, they do not consider for those who are going to be affected. Welfare is not their primary motive. Business cycle have serious consequences on the well-being of the society. So when there is expansion, when there is contraction, contraction has a much more severe impact on the economy, because it leads to rise in unemployment, which leads to rise in fall of income, which leads to I meant to say fall in income and rise in poverty. Are we clear with that? So here are a few features of expansion, peak, contraction and trough. I believe this is very easy for people to understand. Now, basically, there are certain types of indicators. There are three types of indicators. One is called as leading, one is called as lagging, and one is called as coincidental. So, what is a leading indicator? A leading indicator is an indicator in which the variable is changing in the present, but the impact on output will be in the future. So there is some variable like output, employment, price. Economic variable is changing in the present, whose impact will be seen in the future. So some event occurring in the present having an impact in the future is called as a leading indicator. Example, order of new plant and machinery. The order is given in the present, but the impact will be seen in the future. Such indicators which move in advance are called as leading indicators. Then there are lagging indicators. Now, what is a lagging indicator? A lagging indicator is where the variable has changed in the past, but the change in the indicator of the past or variable of the past has an impact on the present. For example, unemployment in the year 2023 will have an impact in the year 2024. Sales of the past year will have an impact on the present year. So sales, unemployment, national income are lagging indicators. And then there is coincidental abhi singham, which means the variable has changed in the present and the output will also change in the present. So both the changes are in the present, then it is called as a coincidental indicator. So dear students, there are three indicators: leading, lagging, concurrent. Concurrent means coincidental. An event in the present has an impact on the future, leading. The event of a past has an impact on the present, lagging. The event of the present have an impact on the present is leading. Coincidental. So can I say the inflation rate of the present will have an impact on the present? If government changes the prices of petrol from today 8 p.m., then the impact will be felt from today 8 p.m. So dear students, we have how many indicators? 3: leading, lagging and coincidental indicators. Now, what are the causes of business cycle? Another very important concept. There are two causes, internal and external. Dear students, internal means endogenous. External means exogenous. Yes, dear students, are we clear till here? Kindly reply in the chat box with a yes so that I know that we are sailing smoothly. ரொம்ப நல்லா இருக்கா? So, fluctuations in effective demand means they are talking about aggregate demand. But if aggregate demand rises, there will be expansion in the economy. And if aggregate demand falls, there will be contraction in the economy. Thank you, Sindhu. Thank you, Surya. Thank you, Sangeeta. Then fluctuations in investment. If investments will rise, then there will be expansion. If investment falls, then there will be contraction. Similarly, if government spending rise, expansion. If government spending falls, there will be contraction. Macroeconomic policy. So beta, there are two types of policy: expansionary and contractionary. Expansionary policy will be used during contraction and contractionary will be used during expansion. So if in an economy there is expansion, we need to bring contraction. If there is contraction, then we need to bring expansion. There are two types of policy, a monetary policy and a fiscal policy. Monetary policy is given by central bank, whereas a fiscal policy is given by a government. Monetary policy talks about interest rates. whereas fiscal policy talks about taxes and government expenditure. So the concept of aggregate demand was given by Professor Keynes. According to Keynes, aggregate demand is a cause of business cycle. According to Professor Hotry, money supply is the cause. So if in an economy money supply is more, it will lead to expansion. Why is money supply more? Because the interest rates are less, which will result into a higher money supply, which will result into an expansionary trend. Whereas if money supply is less, it would lead to contraction. Yes or no, Tanuja? Then there are certain psychological factors in which there are three other economists. One by the name of Pigou, one by the name of Scumpeter, and one by the name of Nicholas Caldor. According to Pigou, it is the waves of optimism and pessimism. So Pigou believed that if in an economy people are optimist, then it will lead to expansion. If in an economy people are pessimist, then it will lead to contraction. Then Scumpeter believed that innovation is a cause of business cycle. Higher level of innovation, more innovations will lead to expansion, lesser innovations will lead to contraction. Then Nicholas Caldor believed that the prices of the present will have an impact on the future. So there were three economists, Pigou, Nicholas Caldor, and Scumpeter. Along with that, we had discussed about Keynes, who promoted aggregate demand as a cause of business cycle. Professor Hotry, who argued that money supply is the cause of business cycle. These are all the internal causes of business cycle. Now comes external. So if there are more wars in the economy, there will be contraction in the economy. Wars lead to destruction. But if you reconstruct after a war, when developmental activities are taken, it will lead to expansion. Technological shocks, more the technological shocks, more will be the expansion. Natural factors can be favorable or unfavorable. If the natural factors are favorable, it will lead to expansion. If the natural or climatic conditions are unfavorable, then it will lead to contraction. So dear students, natural factors means the climatic conditions. Natural factors can mean the occurrence of a natural calamity. If we consider Japan, there are frequent natural calamities, natural disasters. So can I say it is an unfavorable situation which can lead to contraction? Population growth. So beta, can I say population growth needs to be compared with national income? So if national income rises, population also rises. But national income rises in a greater proportion. This is a good indicator. Income is rising more than the population. And therefore, it is leading to expansion. Whereas if national income rises, population also rises, but the rise in population is much higher, then it will lead to contraction. Yes, dear students, are we clear? Give me a reply in the chat box. Is there anything that I can help you with in this chapter now? Again, dear students, you have 5 minutes. Go through chapter 5. Ask doubts. if any. In the meantime, I want a reply in the chat box saying understood, sir. Understood is also okay. Sir is not a prerequisite. Just type in the chat box understood or not understood. Yes, I'll be waiting for your reply in the chat box. Kindly revert. I hope we all are clear. We all have understood. Thank you, Sangeeta. Thank you, Nandini. If there are any doubts, I will be solving them in the next 5 to 7 minutes. You have chapter number 5. Thank you, Shivani. Kamal, can you please ask me your question again? Thank you so much, Sindhu. Thank you so much, Surya. Thank you so much, Tanuja. I'm glad that you all have understood. Yes, Kamal, if you can frame your question a little better, I can probably try to help you. Because unfortunately, I could not understand what you were trying to ask me. But we can make a try again. All others can go through the entire chapter, MCQs, anything and everything. Kamal, if you are there, I'm waiting for your question to be asked. Sir, that in today's session you are displaying MCQs of chapter you thought. So I asked yesterday. Sure, we can. But these are MCQs from ICI material. So Kamal, these are not different kind of MCQs that I have displayed. You want me to display for national income as well? So once we are done with this, I'll give you 5 to 7 minutes for national income as well. No worries with that. I hope first few MCQs are solved from here. Anybody, once you are done with revising, you can post in the chat box saying next chapter. Is there any MCQ in which you have a doubt? Do you want me to solve any of the MCQs? Take your time. There is absolutely no hurry. Fifth question, there is a doubt, Nandini. All right. So, beta, question number 5 is asking which describes the best typical business cycle. So, answer is A. Economic expansions are followed by economic contractions. The very first line that we studied of this chapter. So, it is alternate expansion and contraction. Do we only study inflation? No. Inflation is expansion followed by rising income, and unemployment is contraction. So if you have to choose between A and B, A is a better alternative. I hope I am clear with that. B, C, D are the incorrect options, whereas A is the correct option. Okay, Nandini, no problem. Is there any other MCQ that I can help you with? Do let me know. I repeat that these are just a few MCQs that have been taken from the ICI material. For better and higher practice, you definitely should go through the ICI material, or even a taxman material or a cracker material can help. Because when it comes to macroeconomics, there are very few and limited MCQs which are given in the ICI material. So for macroeconomics, you should be ideally having another material in the form of cracker or a taxman for additional practice. Yes, Nandini, thank you. No problem. If there is anybody else with any other MCQ that they want me to solve, I am waiting for your reply. Once you all are done with revising this chapter, let me know in the chat box saying next chapter. So, this is a very scoring chapter. Chapter number 5, chapter number 1, we can easily score the entire amount of marks which are asked in the question. These two chapters have a collective weightage of at least 15 to 20 marks. 15 marks is a sure shot. Anything above 15 is a bonus from chapter 1 and 5. These two chapters, your target should be to score maximum, and if you ask me, all the answers should be correct from these two chapters, because they are very easy to understand, easy to grasp. No major difficulty in these two chapters. Yes, Sangeeta, Tanuja, Kamal, Nandini, Sindhu. So, Kamal, I had an idea for you. Why don't you solve all the MCQs of national income and come in tomorrow's class? Now, whichever MCQ you have a doubt in, I will solve those doubts for you. What say? Works for you? Yes, Anna. Yes, Kamal. Does it work for you? Do reply in the chat box. I'm still waiting for reply in the chat box from others as well. As to, is there anything that I can help you with? Kamal, do you want me to show it in the YouTube live class? You can request for that as well. But I personally feel that it would be better if you come revised from home. If you do all the MCQs from home and come to the class, I believe that is a better technique to go ahead with. But if you request me to show the MCQs over here, I don't mind doing that. Just let me know what is your preference. It would be nice of you if I get a reply from your end so that I understand what is the requirement, Kamal. No reply from Kamal, it seems. Chalo, everybody, do let me know. Can we go to the next chapter? All right, so I finally got a few reply. Thank you, Kamal. All right, Surya, Sangeeta, Shivani. I think we should go to the next chapter, which is by the name of public finance. So I will try to cover all the important topics from public finance. So that this chapter is divided into 4 units. A very, very important chapter. Many MCQs can be asked from this chapter. The first unit is by the name of fiscal function. The second unit is by the name of market failure and government's intervention to rectify the market failure. The third unit is by the name of budget. That is, what are the concepts of how a budget is prepared, what are the components of a budget, etc. And the fourth unit of this chapter is by the name of public finance. The fourth unit is by the name of fiscal policy. So, beta, what are the fiscal functions? The very first unit talks about what was the scenario when Adam Smith advocated and what was the scenario post 1929. So I hope we all know that, dear students, Adam Smith advocated capitalist economy. He said that that government is the best which governs the least. According to him, supply creates its own demand. So if there is a contraction in the economy, we keep producing. Because of higher output, there will be higher employment, which will result into higher level of income for people. When they spend, the economy which is in contraction will start to run up in expansion. So supply will create its own demand. He promoted capitalist economy. There was no need of government's interference. That government is the best which governs the least. He believed that supply creates its own demand. Government has a passive role, secondary role. Government can do only three functions. According to Adam Smith, government should provide internal security, that is law and order within the country, fight external aggression, that is wars, and third one was to provide certain basic amenities in an economy. Yes, dear students. Now, after 1929, that is the year of Great Divide, we realized that supply did not create its own demand. We realized that contraction was not automatically converted into expansion. We realized that Adam Smith's theory were not working. And therefore, there was a person by the name of Richard Musgrave who believed that along with the government performing passive roles, secondary role, now government needs to start with active role and primary role. So according to Richard Musgrave, government should play an important role in not only allocation of resources, but also in income distribution and macroeconomic stability. So there were three more functions which were added in the government's bucket list. First function is by the name of allocation. Second is by the name of distribution, and third is by the name of stabilization. Now, why do we need to allocate, and what do we need to allocate? We need to allocate resources. So resource allocation. Why is there a need to allocate resources? So that they can be utilized efficiently. If everything is left to private sector, they will misallocate because wants are greater than resources. This will result into scarcity. Scarcity will result into a rise in price. So if everything is given to private sector, they will produce only those commodities for which they can get a higher price. At a higher price, not everybody can afford it. Therefore, there will be misallocation of resources if everything is given to a private sector. And therefore, government should play an important role in allocating the resources so that there is optimum utilization of resources, so that there is practically the best possible utilization of resources. Then government has to do the function of distribution. Now, what do we distribute? Whenever you talk about economics, we talk about distribution of income. Now in India, we clearly have two sections in the society. One is the rich, one is the poor. So rich is becoming richer, poor is becoming poorer. Government needs to do something about it. What does the government do? Government takes more taxes from the rich and passes on the benefits to the poor in the form of subsidies. So government should first allocate, then government should redistribute the income, and most importantly, government should bring about stability in the economy. Because of business cycle, can I say there is a lot of fluctuation in the economy? And if there are fluctuations in the economy, it will result into uptrend and downtrend in the economy. So stability has to be brought about, and for stability we can use a monetary policy or a fiscal policy. As I have told earlier, only today's class, monetary policy is announced by the government or RBI. It is the RBI. It focuses on the interest rates. So according to Richard Musgrave, can I say the theory of public finance, a book written by him, the government has to perform three additional functions: resource allocation for efficiency, redistribution function for fairness, and stabilization for the purpose of stability. We need to control inflation and recession. Yes, Surya. Chalo, everybody, can I say this was your unit number 1? What are the fiscal functions of the government? There are 3 functions of the government: allocation, redistribution, and stabilization. Everybody, quickly give me a reply in the chat box. Are we clear with that? Yes or no, quickly, so that I can go to unit number 2. Now, unit number 2 talks about market failure. See, beta, there are 2 concepts. Either the market is at equilibrium. When is market at equilibrium? When demand is equal to supply. And the other concept is by the name of market failure. Market failure is a situation when demand is not equal to supply. So a market fails when there is overproduction, underproduction, surplus, scarcity, when demand is greater than supply, when demand is lesser than supply, when there is a need for government to interfere, then such a situation is called as market failure. Market failure is a situation where scarce resources are resulting into overproduction or underproduction, either in surplus or scarcity. Either demand is greater than supply or demand is less than supply. If there is a need for the government to interfere, then it is called as market failure. In perfect competition, will there be market failure, Surya? No, because perfect competition we have equilibrium. But perfect competition is idealistic, not realistic. Most of the markets fail because demand is not equal to supply. There are 2 types of market failure. One is demand side, one is supply side. Demand side market failure is when every person wants a particular commodity, but not everybody is willing to pay. For example, we all require defense services, but not everybody in the country pays for defense. So that is a demand side market failure, where everybody is willing to consume the commodity, but not everybody is willing to pay for that commodity. Whereas supply side market failure is due to externalities, due to external cost like pollution. The cost of pollution should have been included in the cost of production. Yes, Surya, absolutely correct. So can I say supply side market failure is a situation where the producer is charging only the private cost and not the external cost. Private cost is the cost of manufacturing the product. For example, this shirt requires 500 rupees for manufacturing. But while producing, the producer has created pollution, say worth rupees 100. So he should have included 100 rupees external cost in his total cost. When such a thing is not done by the producer, it results into a supply side failure. So demand side market failure means demand curve do not take into account full willingness of a consumer to pay. Whereas a supply side market failure is a situation where the supply curve does not incorporate the full cost, which is the external cost. Absolutely correct, Surya. Can I say there are 4 reasons for market failure? Number 1 is market power, that is nothing else but monopoly. Number 2 is externalities, that is negative production externalities. Number 3 is public goods, and number 3 is incomplete. Number 4 is incomplete information. So how many causes are there for a market failure? There are 4 causes. Under market power is a monopoly. What does a monopoly do? Who is a monopoly? A monopoly is a price maker. Because he is a price maker, he can charge a higher price and produce a lower output. Therefore, there is underproduction and market fails. When we talk about negative production externalities, we are talking about pollution. Pollution cost is nothing else but the external cost. This cost should have been included. So if this cost is included, cost would be higher, supply should have been lower. But because these costs are not included, there is an overproduction and therefore market fails. So in case of market power, there is underproduction. In case of externalities, there is overproduction. Now externalities can be unidirectional or reciprocal. Only one person affecting the other party is unidirectional. Whereas if both parties have an impact on each other, then it is called as reciprocal. So for example, in a residential area, there is a construction site. Your mother went to sleep and at the same time, the drilling machine starts its work. Because of the activity of drilling machine, will your mother take some vessels, go in the building next door and bang in front of her or him? No. So it is a unidirectional, one party having an impact on another party. I hope we all know what is an externality. Externality means a beneficial or a detrimental impact on the third party or on the other party. They can be positive or negative. But a positive means a beneficial impact. Negative means a detrimental impact. A yes or no? Are we clear? Have you all understood till now? Kindly reply in the chat box. Are we all clear? Do you want me to discuss any of the 2 points, monopoly or externalities? Are we clear with what is a private cost? What is an external cost? What is unidirectional? What is reciprocal? Absolutely correct. Surya, it is a cost or benefit which is not included, is an externality. Cost is a detrimental impact, benefit is a beneficial impact. So cost is negative whereas benefit is positive. Therefore externalities can be positive or negative. So there is a concept called as a social cost, which includes both the private cost as well as external cost. Private cost is borne by the individual. Private cost is the cost of production of a particular commodity. Whereas external cost is nothing else but pollution or environmental degradation. Then there are private goods and there are public goods. So you must have come across certain words called as excludable, non-excludable, rivalrous and non-rivalrous. Saranya, what do you want me to explain in externality? Saranya, externalities means either a beneficial impact or a detrimental impact on the third party. Are we clear with that, Saranya? Beneficial means positive, detrimental means negative. Externalities can be unidirectional or reciprocal. Unidirectional means only one party has an impact on the other party, whereas reciprocal means both the parties will have an impact on each other. For example, there is a bakery and there is a chemical manufacturing company. Both are neighbors to each other. Bakery creates air pollution, chemical factory creates water pollution. Both will have an impact on each other. Saranya, have you understood what is a private cost? Private cost is the cost of manufacturing a product, whereas external cost is the cost of pollution. A producer only charges for private cost, does not include the external cost. But in the society has to bear both private as well as external cost. So that external cost should have been included, but it is not included. So imagine if external costs are included. Because of inclusion of external cost, the costs will rise, and therefore Saranya, supply will fall. Because higher the cost, lower is the supply. There is an inverse relationship between cost and supply. So there should have been lesser production. But does a producer charge external cost? Unfortunately, he doesn't. So because the producer is not charging for external cost, his costs are less, his supply is more. Therefore, can I say there is overproduction? And if there is overproduction, there will be a market failure. Are we now clear, Saranya? Absolutely correct, Surya. Private goods have a free rider problem. That is wrong because public goods have a problem of free rider. Yes, Saranya, I am waiting for your reply. If we are clear, you need to let me know. If not, what is your doubt? I will solve your doubt and then go to the next part. I hope, Surya, you are clear that private goods are not something which are having a problem of free rider. Public goods have a free rider problem, not private goods. Yes, Saranya, I'm waiting for your reply. Please reply ASAP as soon as possible so that we can go to the next part. Okay. So the next concept is by the name of public goods. Can I say private goods, there is ownership, public goods are for free. Under private goods, we need to pay a price. Public goods are available for free, therefore there is no price. When you have to pay a price, then it is called as excludable. When you don't have to pay a price, it is called as non-excludable. Rivalrous means benefit to others will be reduced, whereas non-rivalrous means benefit to others doesn't get affected. So if you want to understand what are public goods and private goods, you have to understand what is excludable, non-excludable, what is rivalrous and what is non-rivalrous. Pure public goods will be price also needs to be paid and rivalrous. So pure private goods are excludable as well as rivalrous. So is this mobile phone? Am I supposed to pay for this mobile? It is excludable. If I use this mobile phone, will somebody else be able to use it at the same point of time? The answer is no. So it is rivalrous as well as excludable. Those goods which are rivalrous as well as excludable are called as pure private goods. Category number 1A. Those goods which are non-rivalrous and non-excludable are pure public goods. Goods which are rivalrous but non-excludable are called as common access resources. I repeat, goods are called as common access resources. Common access resources are those goods which are available for free, but if you use those goods, then availability for others will be reduced. For example, if I have to talk about a pond, I go fishing in a pond. There are 1,000 fishes in a pond. If I take 50 fishes, then availability for the next one will be 950. So common access resource have a problem called as tragedy of being common. And then there are club goods. Club goods are excludable because for them you need to pay a price. But they are non-rivalrous, because can I say that if you use a particular good, the benefit to other is not going to get reduced. Hey, are we all clear? So the third reason for market failure is public goods. Then there are quasi-public goods which are called as mixed goods, or they are called as merit goods. They are near public goods. They have some qualities of private goods, some benefits of public goods, but they have a very high positive externality. Very high positive externality like healthcare, like education. Yes, Surya, you are absolutely correct. Public goods are produced less, therefore there is a market failure. There is underproduction of public goods. Then common access resources, global public goods. Global public goods are basically goods which are utilized by the entire world. Environmental problems, communicable diseases, the vaccine, international trade, technology, global knowledge for development. All these are global public goods. Now there is a problem which is by the name of free rider. Free rider means benefiting from the action of others without paying. So because somebody else has paid for it, you are also getting benefited. Taxpayers pay the money and you get the benefit of defense. Money is paid by taxpayers, but those who have not paid also get access to defense, public parks, public toilets, etc. So a free rider is a consumer or a producer who does not pay for a non-exclusive good in public expenditure that will be paid. So public goods provide a very important example of market failure. There is a free riding problem. Public goods will not be provided by private market because they are for free. So private goods, private markets will underproduce public goods, and therefore there is a market failure. Yes, dear students. So now I am giving you 10 minutes for unit 1 and unit 2 of chapter number 7. Again, the second part, unit 2, part 2, I believe is very simple to be understood. This can be done as a self-study. But if you have any questions, if you have any doubts, you can feel free to ask me. What is the government intervention? So in case of monopoly, how does the government restrict monopoly? By new rules and regulations. Yes or no? So we need to have government intervention in case of market power, in case of externalities, in case of merit goods and demerit goods, in case of incomplete information. So dear students, why does market fail? One another reason for market failure is incomplete information. One party has more knowledge, another party has lesser knowledge. At times seller has more knowledge than the buyer, at times buyer has more knowledge than the seller. So it results into asymmetric information. So that is another reason for market failure. How does government rectify market failure in case of monopoly? by starting its own production, by making price cap, by rate of return cap, by enacting an act in the name of Competition Act. Then how does government rectify market failure in case of externalities? So government has a concept called as cap and trade, Pigouvian taxation. So government can use tax policies, pollution tax, and government can use cap and trade. So what does the government do under the concept of cap and trade to control pollution? So suppose there are 5 firms A, B, C, D and E. Each of them are polluting 10 units. So the total pollution created by these 5 firms is 50 units. Government will cap it. Government will say that you can only emit 7 units of pollution. You need to buy these permits from the government, which will increase the cost. If you have to buy a permit, you'll have to spend. Spending means higher cost. Now you want to achieve the same level of output but with lesser pollution, then you will have to improve your technology. You will have to bring in new machinery. You will have to work efficiently so that you reduce your pollution. Few firms worked efficiently, few didn't. So A, B firm reduced the pollution to 4 units and 5 units. C firm was at 7. D and E were at 10 and 9 individually. So can I say AB took initiative to reduce pollution? New technology, pollution abatement mechanism must have been used by them. Now, can I say they had purchased 7 units but they used only 4? So government will allow them to trade the balance 3 units. These 3 units will be sold by A to D and 2 units will be sold by B to E. Can I say because of this cap and trade, first there was a cap, then there was a trade. Now this will increase the cost of D and E, reduce the cost of A and B. Because A and B worked efficiently, so because of trading, they will sell these permits to D and E. This concept is also called as PAT. Perform, achieve and trade. You performed, you achieved your targets, then you are allowed to trade. This concept is called as cap and trade. Then there is the concept called as pollution tax. So government can tax you for polluting. Taxing you will increase your cost, reduce your production. So I think I have covered the important parts of Unit 1 and Unit 2. I request you to go through Unit 1 and Unit 2. I am displaying a few MCQs as well from Unit 1 and Unit 2. Now under Unit 1 and Unit 2, there is central and state finance, which you need to read it from your material of ICAI. So these are a few questions. I hope you have got these notes. If you have, there are many more questions from Unit 1 and Unit 2. 20 to 25 MCQs are there. So I repeat, I am giving you 10 minutes. We are on chapter number 7. Unit 1 and Unit 2. If any doubts, please ask. So, Surya, Pigouvian tax, under which government will tax you for the pollution that you have created. So, because of tax, your cost will increase and your supply will decrease. How much will be the value of tax? Tax will be equal to the pollution that you have created. So for this, we have a pollution control board. For these, we are people who will measure how much is the pollution that you have created. So what are the difficulties in Pigouvian tax? It is very difficult to estimate the amount of pollution that you have created. It leads into high administrative cost, because if there is a pollution control board, if there is a pollution control act, then you need people to work under that. Now, at times it may so happen that the tax collected is lesser than the cost of running the department. If the commodity has inelastic demand, then the burden of tax will be shifted to the consumer. When you charge a tax to the producer may be discouraged to work in India. He might shift his operation to other countries, which can result into higher unemployment and lower output in our country. So can I say, Surya, because you created pollution, government will tax you for the amount of pollution that you have created. Now this tax will discourage you to produce. Since you are not including the cost of pollution in your private cost, therefore government is taxing you and making you forcefully include that cost. Are we clear, Surya? If there is anything else, you can let me know. You can read the material. So from this chapter, unit number 1, you need to study public and state finance from the ICI material. Unit 2, part B, government interference, also you need to read from ICI material. What are the ways through which government intervenes for rectifying market failure in case of monopoly, in case of externalities, in case of merit goods, demerit goods, in case of incomplete information, and in case of what can I say, unequal distribution of income. So I'm waiting for your reply. If there are any doubts, I will be solving those doubts. If not, then that's it for today. Thank you so much. Please like, share, subscribe, comment, hit the bell icon. But I'm waiting for another 5 to 7 minutes to solve your doubts from unit 1 and unit 2 of chapter number 7. Tomorrow's class, we will try to complete chapter number 2 and chapter number 7, unit 3, unit 4. Surya, Saranya, Sindhu, Nandini, Kamal. If there are any questions, any doubts, kindly post it in the chat box. No, Surya, that will be done maybe uh, day after tomorrow. So tomorrow's target is to complete chapter number 2 and the balance part of chapter number 7. We will do it, Surya. So don't worry. Money market will be taken care of in the next lecture. Okay, Surya. All right. So if there are any doubts, please let me know in the chat box. Any questions, any queries? If there are no questions, no queries, we can be leaving this YouTube live. As I told, that's it from me today. Thank you so much. Please like, share, subscribe, comment, hit the bell icon. That's my time. Yes, Surya. Thank you so much, Nandini. Thank you, Surya. All right, then. I think that should be it from our end today. I do not see any doubts coming forward. If at all there are any doubts, you can ask me in tomorrow's class. Kamal, I request you to come solved with the MCQs of national income. Surya, if you have difficulties in money market chapter, I think you should be revising it and marking all your doubts so that I can help you in that chapter whenever we do that chapter. All right, then I am leaving. That's it from me today. See you in tomorrow's class. Bye bye.